Hello, everybody. Welcome to the Friday live stream. Today, I want to do something a little bit different and just talk about taxes because taxes are due. They're coming up. I think we got 30 days roughly here and there. So I think it's important that we all get together, ask the questions that we are too afraid to ask, and get this out of the way so we can do the most exciting part of crypto investing, taxes. So with that, to that end, I got a couple of people who can answer all your questions. Andrew Gordon, welcome back, CPA and lawyer. I appreciate it, from Gordon Tax, coming back in. How you doing, buddy?
Doing well. Thanks for having me.
Absolutely. And then, of course, we've also got David Kemmer from CoinLedger, co-founder and CEO, which is the software I've been using now for 4 years straight, something like that. So, David, welcome back.
Might be more, but
Maybe
thanks
more.
again for having me back. It's always good to talk taxes.
Yeah, everybody. So what I want to do is bring you guys in and just have people ask questions away in the chat. We'll answer those questions and kind of go from there. But before we get in that, so everybody just put your questions in now. I know everybody's got some, don't be afraid. But I wanted to go over a couple of things. One of those, I think the big one is, well, there's two. The legality of what's going on in the Senate as far as the DeFi broker rules, and then also tax loss harvesting. Because we and Andrew were talking about this. It's a good idea not to just think about tax loss harvesting in December. We should, since we're all getting crushed right now, let's be honest, maybe we should be doing that like right now. So anyhow, Andrew, first of all, let's talk about that new brokerage rule.
Yeah. So on the broker rules, we talked about before, some of you may recall that there are new requirements that were passed in government that are going to require exchanges to issue a tax form for your crypto activity, a 1099-DA. And this is going to start to come into effect for tax year 2025. But there was also talk and actually rules that passed that applied these rules to DeFi exchanges. So if you were traded on some DeFi exchange that has no connection at all to the US, they were going to be forced to start reporting. The effect of that, likely excluding US people or even just completely leaving the US. And so fortunately, very fortunately, first the Senate introduced a bill to repeal the DeFi broker regulations. And that passed about a week ago. And then just this week, a couple of days ago, a similar bill passed the House to repeal the DeFi broker regs as well. This is great news because if these regulations had applied to DeFi exchanges, the requirements would have been so considerable that nearly no one would have been able to comply. And like I said, it would have forced businesses out of the US.
Holy smokes. Well, it's a good thing that that's one positive thing, is we're actually seeing a little bit more of legislation come through that's positive for the crypto space. So I like that. And then I think somebody actually already beat me to it. Fun Coupon says, the best thing I can do is buy high and sell for a loss to avoid taxes. Let's talk about that. First of all, what is that? Why do we get to do it and traditional equities don't get to do it? And what's the best time to start thinking about this thing called tax loss harvesting?
Yeah, I guess I'll start. David, feel free to jump in. But maybe even just to begin, let's talk about what tax loss harvesting is. We're always excited when the market is up, but from a tax perspective, there's a big opportunity when the market is down to realize losses. Why might you want to do that? Well, when it comes to paying taxes, you pay taxes on your gains, but the gains are net of any losses. So during the year, if you had losses that you can incur, those can reduce or potentially completely offset your gains. Now with crypto, there's a very unique loophole, and we'll talk about how this loophole is likely to close. But with stocks and securities, if you sell at a loss and buy back within 30 days, you don't get to take that loss. It's called a wash sale, and that loss is eliminated. But under current law, it only applies to stocks or securities. Crypto is neither. So most people don't believe it applies. In fact, the government doesn't believe it applies either. So as a result, if you sell, for example, if you had bought Bitcoin at 100,000, right, near the all-time highs, and today I think we're mid 80,000s, you can sell, realize a taxable loss, and then buy back a short time later, an hour, a couple hours later, you could buy back that very Bitcoin maintain your position, but from a tax standpoint, have a loss that can reduce other gains.
I gotcha. And you know what? Like some of the people will look at it because on my channel, I talk a lot about dollar cost averaging. So people are buying. Sometimes people buy the dip. Sometimes we do nothing. And we have a lot of this cost basis. And I think it's something that we should all be taking a look at a little bit harder. David, do me a favor. Talk to us about with CoinLedger. And this is something that I actually pushed you guys for a lot, which was the portfolio tracker. Because when I take a look at something like this, I can see how this would kind of fit into the tax loss harvesting and go, oh, I'm underwater for Solana. I didn't think I was, but now I am. How do we get into this as far as this portfolio tracker? How much, and actually how much was it?
Yeah, exactly. So to your point, the portfolio tracking tab within CoinLedger, completely free. You don't have to pay for it. You can connect and sync your wallets and use this completely for free. But what it'll do is it'll pull in all of your historical transactions. And then because of that, it can establish your cost basis in all of your cryptocurrencies in your holdings. And so it can tell you, okay, how much have I actually invested in Bitcoin and Ethereum versus its current market value? And then that can obviously tell you, okay, I'm in this amount of a gain position unrealized, or I'm in this amount of a loss position. As you mentioned, that can be very helpful for establishing tax loss harvesting opportunities, because if you see, actually in my Ethereum holdings right now, I'm, in a $30,000 loss position, it might indeed make sense for me to harvest those losses, dispose of that Ethereum and enter the position if I want to, again, at a lower basis. And so that is kind of that portfolio tracking tab. This is what, if you're just looking at your holdings on an exchange, the exchanges can't do, because if you transferred crypto in or sent it out, they lose what your basis is. But CoinLedger is stitching your transaction history from all of your wallets and all of your exchanges. And so that's why we can build this nice portfolio view for you to actually, perform, actions based on your basis and your holdings.
Yeah. Yeah, I like this one because I've used this personally because I've had to do some selling recently for personal reasons. And I got to tell you, it's nice to come in there and go, oh, I'm up this much, I'm up that. And there's some of these, like this is a mock-up that you guys created for me. So thanks. But this isn't my wallet per se, but it is nice to go in there and go, oh, I'm up this much. I can take so much from, say, Bitcoin, so much from, say, Solana, so much from, Link or whatever is in this example. It is nice. And I like it because then I can actually push this into the different reports that I need to do. I use a CPA, but some people will use, like, there's a question here right now. Question for David. Any time frame on when CoinLedger will support leverage trading for TurboTax? I believe you support spot, but not leverage this time, correct? Actually, I was looking for another one. We'll get to that one.
That's a good question.
That's a good question.
We do support for certain exchanges, Kraken, for example. And we're working on rolling out more and more integrations for margin trading, leverage trading. So this summer, that's going to be a big push. Exchanges like Kraken are already live. And so I'd say within the next year, there'll be a lot more coverage on the leverage side.
Gotcha. And this was the one I was looking for. Are the reports that get generated, because I don't use TurboTax, are the reports generated by CoinLedger enough to submit when using TurboTax?
Yes, the answer is yes. CoinLedger will automatically generate, a report that is compatible with TurboTax that details your gains and losses and income, and you just feed that into your TurboTax account if that's how you're filing your taxes.
Yeah. And then I know like for me, there's also another button. It says like to send to your CPA. And it is kind of, you can put I think it's I put the email in and then she's able to like pull all the data. So that's
exactly. Yeah. So depending on how you do your taxes, whether it's with a tax professional like Andrew or with an e-filing software like TurboTax or TaxAct, you can use CoinLedger with any of those. Either send your reports to your tax guy or upload them into the e-filing software.
Gotcha. And then I think this would be, well, I don't think we can really answer this, but so for harvesting, we should sell everything that's in the negative now, then buy back immediately after. we can't tell you what to do. That is for sure. I can't give you financial advice, but if you're looking for tax loss harvesting, that's pretty much how it's done.
There's just one quick point, if I may, on that. There are some negatives, or one big negative to tax loss harvesting, and that's that it resets your holding period. One of the most effective and simple tax strategies is hold for long term. Clients ask me all the time, how can I cut my tax rate on my crypto gains? Hold for long term, which is more than a year. The tax rate holding for long term, about half of the tax rate of short term. Long term is 15%, some cases 20% at most. So it's much less than short term. But if you sell, recover that loss and harvest that loss and then buy back, now your holding period has restarted. And so if you're thinking about selling and actually cashing out, not buying back, you should consider your holding period. Also a good feature to look at the portfolio and look at when you bought your different tokens. But that is one downside to consider. So speak to a tax professional, review your portfolio, think about your goals before you just sell everything and buy it back.
That's good. You know what? After all the years and years I've heard about tax loss harvesting, I never have heard that. And it obviously makes sense. When you reset your holdings, now if you're worried about, well, I don't want to do short-term gains, then it resets it for, one full year, and who knows what's happening. So sometimes it's just, we overcomplex things we don't really need to be. So well said. Okay. And then from that, there is one. Jay Dougie says, oh, it's the same thing. There's a CSV report. That's the deal. How about this one? I know over here on the site itself, let me zoom out. If you go all the way down, well, there's two things. There's find a crypto tax expert, which is nice. There's Jordan and Andrew at the very top, recommended, very nice. But what about this one here? The done for you service, products for tax pros, tax reports.
If you go to pricing, actually, maybe we should add it to the product, but pricing and then professional services.
Yeah.
Okay. But yeah, a good one to talk through is a lot of people come to CoinLedger and kind of just want to do it themselves, right? They just want to sync their Coinbase and their MetaMask and have CoinLedger spit out their gains and losses and income for that year, download those tax reports like we mentioned. But some people want a much more white glove service approach, if you will. And so obviously that's going to be a more expensive service, as you can see here, but our team and Andrew, folks like Andrew as well, will work directly with the folks who want that more one-on-one tax professional service. They don't feel comfortable doing everything themselves. They just want to hand it off and have someone do it for them. That's what these services really are much more for. We call it kind of done for you. Again, a higher price point than if you want to use CoinLedger to do it yourself. But a lot of folks we found actually do just kind of want the peace of mind of, will you do it for me?
Yeah, I gotcha. And I don't blame people. I got enough. Time is money, and we've only got so much on this planet. Hey, here's a question though. What about the people like for me that still have, we're still have different digital assets, say stuck in Limbo in say like Celsius. How does that work? Because you guys can't connect to them. I also have a problem with Voyager as well. I've gotten it back, but how do we do that because when I do integrations, it integrates with Coinbase quite well and Kraken, which are the only two really that I use. Oh, also crypto.com, but I don't use that much anymore. How does that work out with Voyager and Celsius?
Yeah, with Voyager, it's more simplified because we did build the custom integration with them. Now, if you did get later disbursements from them, you'll need to mark those in CoinLedger, and our support team can guide you through doing that. Celsius is a bit more tricky because they did their bankruptcy different. Everyone had a different way of handling this. Andrew, it might be good for you just to briefly touch on what you see. But what I would encourage anyone who has those problems is, reach out to our support team. We deal with a lot of people who are going through similar things. And if we can't help you directly, we can point you in the direction to people who can.
Gotcha. Okay. Andrew, anything with that one?
Yeah. And I should say too, this is one of the great uses of the Done For You service as well, is we're able to deal with a lot of these types of issues, get it to work in CoinLedger. So sometimes the different sources that can't import for various reasons, we're able to still make it work as part of the Done For You service. So reach out if you're interested in something like that. But with Celsius specifically, one of the reasons that it's perhaps even important to reach out to a professional is, like David mentioned, people have dealt with it differently in the past. Depending on if you treated the initial amount that you had locked up in Celsius as a loss at that time, if you treated it as nothing, there are different tax considerations. And even now, there are options. In fact, some people, there have been more distributions over time. There was recently one just a few months ago that people weren't expecting. So from a tax consideration too, there are some pros and cons of writing off the loss now versus keeping it open. So it's something to talk to a tax professional about.
Yeah, it's talking about Celsius and or Voyager. I know, like with me, there was some integration that was actually being done. I could use it, but then as time went on, it seemed like I kind of lost different transactions. And I talked to my CPA about it, and they said, look, they go, you've done everything you can possibly do here. It's not going to be 100% perfect. And this is just what was said. It's not going to be perfect, but do as best as you possibly can, and then in good faith, we'll work everything out. So with that type of response, how will we go about that? Because Andrew, like we do our best job. We're not going to get 100% right. Will the IRS still come after us and be like, hey, you screwed up this 22 cents jail time? Or how does this work?
So that's a great question. So in my practice, we are fortunate enough to help clients report their crypto on their taxes proactively, but we also have a team of attorneys that help clients that are being audited. The good news is these are not people that we did the crypto work for. They're typically people that are being audited, and then they come to us. But our team has a lot of experience with crypto audits. And what I would say is that we are seeing more crypto audits than ever before. In the last 6 months, crypto audits have exponentially increased. In fact, in December, a month that typically we'd see the IRS doing nothing, they were very active. And this may change with the new Trump administration. But what we have seen historically is that the IRS is very aggressive against crypto. They see this as a great way to recover additional tax funds in an industry that historically was not viewed very favorably by government. So how do you avoid this? The number one way is use software like CoinLedger or a professional to report all your crypto as thoroughly as possible. Now, it doesn't have to be 100% accurate. No, but you should be as accurate as you can.
Sure.
And reporting is essential. So the volume of transactions, if you got 1,000 transactions and you think you have a loss, it is crucial to still report. I hear all the time people that said, well, I had a loss, I didn't need to report. The IRS doesn't know that, and they're not going to figure out that loss for you. They may see all the activity, FTX, all these exchanges gone bankrupt, IRS getting a lot of data. They may see the volume of activity. They may see you have 1,000 trades, but they're not going to figure out that you've got a loss. In fact, they'll likely think you've got a gain. So reporting is crucial, even if you've got a loss, especially if you're very active.
Okay, well that's great to know. The follow-up would be this: what if we've done this for quite some time, we've never filed? So how does that work out moving forward? Because this is what AC talks about.
Yeah. Take that too, David, if you don't mind.
Yeah.
So we also get these calls all the time, and so AC, you're in common company. Many of the people that we talk to haven't reported for years. Now want to do things, get ahead of a potential audit. Now is the time to do that. If you're listening, you haven't reported fully, haven't reported at all your crypto, now is the time to get in touch with a professional, file amendments. What I would tell you is statistically, we have seen that people that are proactive try to come forward, amend, report, avoid audits in the future. And so there is a way to do that. We've worked with hundreds of clients to clean up the earlier years, file original returns or amendments, and 99% of them have avoided further scrutiny.
Gotcha. David, anything to add with that one?
No, I echo what Andrew said. The same thing on the software side. A lot of people every day come to CoinLedger and, essentially are going back years, and CoinLedger has no problem with that. We can generate your tax reports from any year, and we can pull in all of your historical data to do that. So you can jump into CoinLedger for free, bring in your data, you can test it out, view gains, losses, income for free. And if you do want to move forward, which you should, with kind of amending the tax return, you can snag those from CoinLedger, use tax professionals like Andrew, and get squared away so that long term you don't run into headaches with audits and tax penalties.
Yeah, gotcha. I'm going to take, it's a good, well said, both of you. So I'm going to take this one. What happens when you have 280,000 transactions and over 280 wallets? Well, that's fine. And I've got a lot of wallets myself. And I also have, I've got a friend, his name's Bobby. He likes to do some crazy types of degen stuff. And he's got a lot of transactions, a lot of wallets as well. I will tell you this, when you put in a CoinLedger, David will test this. Not everything's gonna be like perfect as it comes through. It's gonna be pretty darn close, but there's gonna be some points where it's gonna ask you, where did you get this crypto? What was the cost basis? And you're gonna have to take a look back at your record. It's not gonna be like perfect, but out of like the, I don't know, we'll say 20,000 transactions that me and say Bobby have done, we'll get a handful. We'll get about 20 or 30 where the mechanism is saying, where did you get this? And just like what we just heard from with Andrew, if you do your best due diligence to get that right cost basis, it usually works out pretty well. And you put it in there and then off you go. So you may get 9,980 transactions perfect, and then the 20 might be a little bit off, but I think that's where you want to be, in my personal opinion.
Yeah, agreed. With 280,000 transactions across 280 wallets, I can just about guarantee that there's 0% chance that you will be able to perfectly capture every piece of data around that trading history. And so it becomes an exercise of what we have all said, your best faith effort to accurately report and calculate the gains and losses and going forward with that. And CoinLedger is a great software to help you do that, but that is a lot of wallets.
that is a lot of, there's a lot of play. And then of course, you look at the profits, you're like, hey, I just made $23 after all that.
Right.
And if on the other hand, you're putting all the data into CoinLedger and it shows that you got a $50 million gain, no fault of CoinLedger, right?
Yeah.
But put in 280,000 transactions and there's one number, something that has a decimal wrong, and you've got a $50 million gain. Reach out to us, done for you service. This is where my team excels. We help clients with millions of transactions, make it work, and tax reports that are accurate. So don't despair. There is hope.
Yeah, no despair. Well, listen, guys, I don't want to keep you guys here too long. I just want to do like a quick impromptu Q&A, get everybody to know that, yes, taxes aren't the most exciting things to do, but you can get through them. And it's not so much of a slog when you get the right types of machinery behind you or nice software. So again, there's a link in the description. I'd like everybody to just at least, this is, I think, as a no-brainer, the Portfolio Tracker by CoinLedger. It's free. You get to use it. You can see your cost basis. You can talk about, tax loss harvesting, but you took a look at the pros and cons right now. Also, on top of that, if you do the Portfolio Tracker, it goes right into your tax software, or right into CoinLedger's tax software. So at least you get something for free and say, hey, this is where I'm at, and then I can move from there and do the things I need to do with taxes. So gentlemen, I don't want to keep you. Thanks so much for doing this impromptu. I really appreciate it. We'll do some more moving forward. So if you got a question, leave that in the comment section, not the live ones, but the ones who are watching this afterwards. And we will answer those on the next episode. So Andrew, David, thanks so much. I appreciate you guys.
Yep. Thanks, Rob. And we'll see you later.
All right.
Thanks, Rob.
Thanks. Bye, guys.